Happy New Year, everyone. Welcome back to this week's Chinese New Year edition of Technical Insights. The STI index ended the week lower on Friday on low volume due to half-day trading on New Year Eve. The benchmark index was down 0.15% or 4 points to 3,138 points. Key indices in the region ended that day mixed as well. The Nikkei 225 index was up 0.09%, while the Shanghai Composite Index jumped 1.28%. Hong Kong Hang Seng Index, however, fell yet again by 0.83%. On the US side, the S&P 500 continued to march higher, up 0.57% or 28 points to close above the 5,000 level for the first time. The Dow Jones Index, on the other hand, slipped 0.14% or 54 points. Nasdaq Composite Index added 1.25% or 196 points as all three major US indices come off their fifth straight winning weeks of gains, lifted by strong earnings report by US companies so far. Another 61 companies in the S&P 500 will be reporting their earnings in the week ahead, like Kraft Heinz, Hasbro, and Coca-Cola, which will shed light on the state of the US consumer spending and sentiments. Traders will also watch out for the latest level on the CPI index, a key inflationary gauge set to be released on Tuesday morning. And more economic data is also expected on Thursday and Friday, including the retail sales number for January, housing starts, and the PPI data. On the weekly view, all three major US indices managed to post their fifth straight consecutive winning week. The Dow Jones Index edged fractionally higher by 0.04% for the week to finish at 38,671 points. Broad-based S&P 500 index advanced 1.37% to close at 5,026 points, above the 5,000 psychological mark for the first time. Tech-heavy Nasdaq Composite Index added another 2.31% to finish the week at 15,990 points, closing in on a 16,000 handle should tech names continue their upward march. On the Asia side, Hong Kong Hang Seng Index managed to close the week in the green, up 1.37% to close at 15,746 points after managing its second winning week of the year thus far. The Hang Seng Tech Index also bounced 2.74% on the euphoric rally that we see on Tuesday, driven by the China midweek market intervention. Hong Kong stock then lost momentum and investors started to take profit on the Tuesday rally. A Chinese government report last week showed a decline in consumer and producers' price in mainland China, extended into January, signaling weak demand both at home and abroad. China economic woes are fundamental and will need more economic stimulus instead of stock market intervention. Our STI index failed to join the rally for the week, falling 1.30% to finish at 3,038 points. Top decliner for the week includes Seatrium, Wilmar, and Thaibev with exposure to the Chinese markets. Breaking down the performance of the STI index last week, we saw that DBS Bank rose 0.99% to close at $32.54. DBS Bank rose 0.99% to $32.54 after it announced a record full-year earnings for FY 2023. The bank reported a record profit of 10.3 billion in 2023, an increase of 26% compared to the previous year. With the strong profit, DBF raised its dividend per share to 54 cents for the fourth quarter, from the 48 cents in the third quarter. DBS also proposed a bonus issue of 1 bonus share for every existing 10 ordinary shares held. UOB, on the other hand, dropped 1.68% to finish the week at $28.14. OCBC also failed to put in a positive performance, falling 0.38% to $12.95. SGX joined UOB and OCBC, all slipping down 3.98% to finish the week at $9.16. For this week's technical analysis, we will be looking at DBS and Seatrium. First, let's take a look at the biggest bank listed on SGX, which is DBS. As mentioned earlier, DBS reported last week a record profit of 10.3 billion. Last Friday, the share price rose 0.25% or 8 cents to $32.54. For the week, the stock is up almost 1%. Looking at the price chart for DBS, the share price hit a high of $34.10 last year in February, before sliding to a low of $29.34 in May. After touching the low in May, prices rebounded to the $33.59 level in August and have since been in a range-bound condition. The recent low that you see in December would definitely provide a very strong support for DBS Bank share price at $31. But with the report last week of record profit, it is unlikely that we will see a pullback to the $31 level. Traders and investors may want to look at the 200 days or the 50 days moving average as possible entries for DBS Bank share price at $31.89 or $32.07 respectively. There are possible levels of support in getting in on the uptrend that we have observed last week. The MACD indicator also turned positive last Wednesday on the news of the bank's results. Both the MACD line and the signal line are still below the zero baseline. The trajectory of both the lines seems to be trending upwards. If both the MACD line and the signal line were to break above the zero baseline in the MACD indicator, it will signal another round of powerful upside move, a pattern that we observed in the July period last year as well. The RSI indicator also broke above the 50-point neutral mark last Wednesday. The latest reading is at 57 points, showing healthy momentum, and the uptrend may have room to run before hitting the 70-point overbought level. First resistance for DBS Bank share price would be the January high that we see over here at $33.64. Next, let's take a look at Seatrium. 2 weeks back, the company announced that it expects to report a net loss for 2023, which will be significantly higher than the previous year. It will make a material non-cash write-down relating to the surplus non-core assets and obsolete inventories for the reporting year, and the company results will be published on February 26. Last Friday, Seatrium share price fell by 3.33% or 0.3 cents to close at 8.7 cents. For the week, the stock is down a staggering 13%. Looking at the price chart of Seatrium, share price hit a high of 14.8 cents last year in February, before sliding down to a low of 10.1 cents in March. After touching the low in March, prices rebounded back upwards to the 14.7 cents level in July as well as September. Prices have since been on a long-term downtrend, touching a low of 8.6 cents last week. So is this the bottom for Seatrium? Looking at the MACD indicator, both the MACD and the signal line are trending downwards, with the MACD line diverging away from the signal line, indicating a possibility of an acceleration of the downside momentum. The RSI indicator also broke below the 30-point oversold mark last week. Based on the pattern that we observed last October, Seatrium RSI also breached the oversold mark to a low of 18 points before rebounding. So the current reading at the 21 points level means that we may not have reached the bottom yet, until at least we see the 18 points level that we saw last year. So the next support level for Seatrium share price would likely be the 7.8 cents low that we saw in 2021 over here. And that's all I have to share this week for this week technical updates. As usual, if you do find this video useful, we do appreciate your support by giving us a like or a share, and hit that subscribe button to stay up to date to our latest content. And I'll see you again next week in the next Technical Insights.